Hey traders, welcome to another crypto market update this beautiful Monday morning. In this video, we're going to be going over some important news topics looking at on-chain analysis as well as the ways that the big tech giants are trying to use blockchain and how they're going about using the technology and implementing it within whatever they're trying to tackle on for projects. And then we'll go over the price action of Bitcoin and some other alts, including Ethereum, Ripple, BNB, and etc. So first off, like we said before, we're going to go over our news topics. We always get our news topics from our Discord. It's absolutely free to join, and there is a bot that posts any relevant news topics related to the cryptocurrency sector. And if you're looking to stay up to date and informed on all things cryptocurrency, it's definitely a good place to be. We also post daily updates for the price action as well. So first things first, let's quickly read about the on-chain analysis for the day. So personally, I've started trying to dive into on-chain analysis more in depth in the last, 2020 here. And the previous dump that we just had was with the reduction of the hash rate. And this is a potential another analysis that we could do. I think it's a little bit less concrete, and we'll dive into that within the actual post here. It was on March 29th, so it's basically posted yesterday. So let's read this. After making a strong recovery from 3,700s-ish to around 65-ish hundreds for Bitcoin's price, it really struggled pushing above 6,400 and 6,800, basically, what it's saying. But they are talking about the stock to flow model and the network's consistent growth in hash rate. And, this is looking more confident for Bitcoin. That's kind of what we're saying at the beginning. So then the main discussion and topic of this is going to be Bitcoin's mempool size. I don't know if it's meme or mempool size, but I'm going to call it a mempool size. So another factor worth considering is Bitcoin's mempool size, as it can also provide some insight into how buyers and sellers are reacting during these uncertain times. So let's continue reading here. The mempool is where all the unconfirmed Bitcoin transactions wait until all confirmations are released to conclude each transaction. I'm just going to drink a little bit of coffee and then we'll continue. All right. The higher the mempool size, the longer it takes for transactions to be confirmed, since more blocks have to be confirmed, more power input. If a jam occurs in the memory pool due to an abnormal size in the transactions waiting to be confirmed, the higher the probability to incur in a higher transactions fee to expedite it promptly, which makes sense. If you want it sent faster somewhere, you have to pay more. Just like kind of any other service, right? Bitcoin's mempool size reaches a record high value at over 130 megabytes per block during January 2018, days after Bitcoin's price slightly crossed its all-time high of 20K. So we can see back right here, that was the peak of when BTC was around 20K. And we haven't seen those highs since. So at this point here, it costed the highest amount to send BTC is what this article is saying. And the higher the mempool size, the more it will cost to send each transaction. So this could suggest a relationship between the number of transactions waiting to be confirmed and Bitcoin's price. If that's the case, the relationship would be an inverse in times of corrections, such as the one investors are facing now. So this is when you have to understand the inverse or non-inverse or normal relationships when you're considering two different instruments, price and, in this circumstance, the mempool size. So let's continue reading here. Considering a period from February 19th until March 13th, when Bitcoin lost 60% of its value, we find that the correlation between the Bitcoin mempool size and its price is negative at 41.2%. And we'll talk about what that means here shortly. This is a very high relationship considering that the correlation for the entire 2020 period available is almost non-significant at 2.34%. So this is what the correlations mean in that percentage. A correlation of 100 means that Bitcoin's price and the mempool size move completely in the same direction, while negative 100 correlated means that they are inversely related. A correlation of 0 means that the variables are not related in any way. So for example, Bitcoin and Ethereum would be positively correlated, because if Bitcoin goes up, Ethereum will go up. It wouldn't be 100% obviously, but maybe it would be in the 50, 20, 30-ish range. We don't exactly know, but that would be a positively correlated instrument. And then, for example, if you're looking at, let's say, Ethereum and then in an Ethereum bear short, that would be a completely inverse correlated. So if Ethereum goes up, the ETH bear would go down, basically perfectly matching one another. So that would be 100% negative correlation. So hopefully you understand and take away an understanding from that paragraph. So let's look at it. And I just want to say that I'm not really going to be using this because it's, in my opinion, still not concrete enough to actually use an analysis, but let's continue reading. Current activity mirrors 2016. In correction periods during 2016 where Bitcoin lost more than 20% in price, we find the same negative relationship between the mempool size and the Bitcoin price, even though both have high differences in values. One period is very inversely correlated at negative 83.1%, which is very correlated, and the other period very slightly negative at negative 4.6, which is not very correlated at all. In the 6 periods where a correlation of up to 20% decrease in the price during 2017 and 2018, we find an inconclusive relationship across the correlations, and this makes it impossible to reach a solid conclusion. Yeah, I completely agree. So it's too random. There's not enough hard evidence, in my opinion, to actually use this within an analysis. However, if we look closely at the 2 periods that occurred during the second half of 2017, when Bitcoin ended up reaching its record period, both periods show an inverse relationship between the mempool size and the Bitcoin price. Between November 8th and November 12th, the relationship was very negative at 85.9%, while between December 17th and December 25th, the correlation was very small at negative 5.6. So 85.9 is very, very correlated. Remember that 100% is the most correlated it can be. That's basically for 1-to-1, if there's a tick up in one instrument, there's going to be a tick down at basically the exact same time with the same amount of aggression and pressure within another instrument. And 85.9 is pretty damn correlated in my view. Positive relationships in 2019. During 2019, 4 out of the 5 correction periods identified showed a positive correlation between the Bitcoin's mempool size and its price, except for the last periods, which showed a slight negative correlation. And then the last thing here, positive correlation in a full year's period. When considering the relationship during each year, instead of only analyzing the corrective periods, we find a clear trend in positive correlation between the mempool size and the Bitcoin's price. Moreover, a high correlation seen in 2017, which is 80.8%, and in 2018, 72.2%, despite not being able to draw a conclusive trend when analyzing the correction periods within those years. So within small periods, you are finding this very highly correlated relationship between the mempool size of Bitcoin as well as the Bitcoin's price. But in my view, we need more evidence. We need more conclusive data that shows that, yes, this is something that we can trust and use within our analysis. So to say the last sentence here, the positive trend, although small in magnitude, is also seen between both variables in 2016, which is 26.3%, and 2019, which is 9.5%. While in 2020, the relationship is practically non-existent at 2.34. So yeah, like I said, I don't think it's ready to call it a piece of analysis that we could use in order to actually speculate on digital assets, but is something to be looking at when we are trying to understand on-chain analysis. Like anything, we have to find out what works and what doesn't. I did think that the hash rate and the minor capitulation understanding and theory makes sense to me. To me, I think that is a valid piece of on-chain analysis that we're going to use from this point forward, but the mempool size to me is something that is yet to be validated in my eyes. Obviously, everyone is different. And then this is going to be the mempool size in bytes. This is just a chart that we have. If you would like this, just message me, Keith, on the Discord, and I'll be able to send it to you. It's just a live mempool size chart, which shows you the size and the dips. And obviously, if you are using this within your analysis, you have to have this chart. So if you are, definitely message me, and I'll be able to help you out with that. Gonna get another drink of coffee, and then we'll go on to the next news topic of the day. All right, so next thing we're going to be talking about is Microsoft files a patent for crypto mining system using body activity data. So this is, in my opinion, a little bit weird, but it's really interesting that Microsoft is trying to create solutions to help the efficiency of mining, because currently mining is very energy intensive. It requires a lot of energy and resources to actually mine crypto, or to mine Bitcoin. Proof of stake is something different, but proof of work requires a lot of energy. So let's read here. Tech giant Microsoft is looking to develop a cryptocurrency system which enables individuals to mine cryptocurrency using their body activity data, eliminating the need for specialized mining machines. Microsoft published a patent dubbed Cryptocurrency System Using Body Activity Data on March 26th. So 4 days ago. Their paperwork details a method of crypto mining which exploits data associated with users' body activity to exercise a new form of proof of work. The document further details. For example, a brainwave or body heat emitted from the user when the user performs the task provided by an information or service provider, such as viewing advertisement or using certain internet services, can be used in the mining process. Crazy, right? Brainwaves, heat emitted from a body, can be used to mine crypto. So they're trying to create completely passive systems that basically the energy is already there in the world, and they're just trying to harness it and use it in a way that's able to mine cryptocurrencies more efficiently. So this is solving major issues that people are having within the proof of work system, where people obviously it does require a lot of energy. You hear stats like the mining consumption energy of BTC is more than some countries, but these solutions are going to shorten that gap and eliminate a lot of the difficulties that we're having with mining proof of work right now, as well as proof of stake as another alternative. So let's continue reading here, but this is very interesting. So to implement the process, a server provides a task to a user's device, which communicatively coupled to the server, a special sensor that indicates body activity of the individual, while a cryptocurrency system verifies whether or not a body activity data satisfies the conditions set by the cryptocurrency system. Ultimately, the system awards cryptocurrency to the user whose body activity data is verified. And we can see right here, very similar to a proof of work system, except we can see right here, instead of computational power, a person right here is actually providing the work. So let's continue reading here. Blockchain patents gain traction. Technology companies continue to experiment with cryptocurrency and blockchain as an attempt to remain a step ahead of their rivals. In the United States alone, the United States Patent and Trademark Office granted 227 blockchain-related patents from January 2014 to October of 2019. Recently, another tech behemoth, IBM, was awarded a patent for the development of a so-called self-aware token. The idea of the developments that the adoption of new forms of currency will create question regarding the ability to validate, authenticate, and coordinate transactions across diverse forms of payment and trade that traditionally had little or no interaction. Brian Armstrong, the CEO of Coinbase, patented a method that enables users to make Bitcoin payments using email addresses tied to wallet addresses without incurring transaction fees. So a lot of interesting stuff happening within the space, and we're going to dive into the tech behemoths right now. Going into another blog post just talking about some of the big things that these tech giants are actually doing. Going into IBM, Microsoft, Samsung, Sony, and then Google, Apple is maintaining its distance. So let's quickly talk about IBM here and then continue on. American tech giant IBM has made new waves in the space for filing multitudes of patents that use blockchain technology. The company has been a leader in adoption since 2014, putting it well ahead of most when it comes to developing and using blockchain-based solutions. One of IBM's earliest forays into technology was exploring the capabilities of blockchain technology to power the Internet of Things. The Address, Energy, and Parallel Technologies Project, or the ADEPT, was born in collaboration with Samsung, which allowed domestic appliances to autonomously interact with its environment. That is super cool. The project's use case was proved by Samsung's washer, autonomously ordering its own detergents and replacing parts. The ADEPT concept uses telehash for communication, BitTorrent powers its file sharing, and the Ethereum blockchain was used for functions that require more in-depth contract capabilities. So yeah, they're creating autonomous machines, and like it's pretty crazy because Gary Vee was talking about this in terms of fridges and other stuff, like Internet of Things but appliances. So it's coming into reality here, everyone. The IBM blockchain is an enterprise blockchain solution aimed at large-scale businesses and corporations. The platform allows users to join existing blockchains or even create new platforms suited to their needs. The IBM website estimates that over 500 live working blockchain projects. Oh, it has over. Wow. These projects cover a broad spectrum of industries, including trade, finance, supply chain, and identity services. So yeah, IBM's working on that. A lot of things going on over there. We already talked about Microsoft's new proof of work system. And they also have Microsoft Azure, I think that's what it's called. And that's creating a cloud computing service, which is providing services to Singapore Airlines, NASDAQ, 3M, Xbox for their platform. I'm not going to dive in too much about that because we've already talked about it. The same platform also is deployed at Starbucks, and it's tracking coffee beans from its source of farmers to its many stores around the world. So very interesting stuff happening on Microsoft. Samsung is huge. They're disrupting the phone space. Apple's definitely behind in terms of implementing this new technology within their phones. Let's read what Samsung is up to. Just going to get a quick drink of coffee and then we'll continue. All right, so for Samsung. Samsung is a major player in the electronics manufacturing industry in particular, and this has also spilled over into the cryptocurrency sector. The company is among the top producers of smartphones and semiconductors, two parts that are actively used by crypto enthusiasts. Samsung's processor became highly sought after during Bitcoin's bull run in 2017, as users flocked to buy ASIC cryptocurrency miners, or ASIC. From the beginning of 2018, the company began designing and creating ASIC chips specifically designed for mining. Samsung also integrated cryptocurrency supports into its smartphone in 2019 with the launch of the blockchain key store application market. The major application launched was a password wallet for users' private keys. The functionality was rolled out with Samsung Galaxy S10 smartphones and now supported on 6 devices. A number of blockchain-based applications have been made available on the blockchain key store since the Galaxy S10 smartphone now supports an even greater number of cryptocurrencies. So they are going full out, allowing many different types of coins and tokens to be stored within their wallet internally on their phone. Last but not least, Samsung SDS, the company's IT arm, has also joined the fray in the enterprise blockchain space. The platform was launched in 2017 and competes with the likes of IBM and Microsoft Enterprise's blockchain solutions. The blockchain platform allows businesses to create and manage their own services for payments, supply chains, identity, credentials, and smart contracts. So there's definitely some strong competition in this field. Sony is also going a different route, but still going the blockchain space kind of going into the future here. The company has taken a slightly different approach in its appraisal of the possibilities of the technology and has earmarked areas that would benefit the most: education, music rights, and sampling. In 2017, Sony announced that it was exploring a pilot project with Fujitsu to record and manage educational subject matter records and grades using Linux Foundation's Hyperledger Fabric. The platform allows educational institutions to virtually store and share academic learning records for individuals in a cryptographically secure distributed blockchain network. So they're basically trying to disrupt the entire education space, really. So there is a decentralized network of education instead of having it in a secure single file somewhere. Obviously, this is a lot more secure. This allows educational institutions or companies to have access to verified, tamper-proof educational records of the respective applicant or student. So this is even going into the student and the grades and really just shaking up the entire, electronic infrastructure of the education system. It allows students and academics to have a real-time access to their own academic records. Sony has also identified an interesting use for AI blockchain technology in the music industry. According to SoundMain description page, Sony began to make inroads in a particularly challenging space for artificial intelligence around 2013. In the field of sound and music production, differentiating different instruments and sound in music is incredibly difficult for machines. It's a uniquely human capability. The software is intended to be used as a remixing and audio rights tool. Artists would be able to record a full set live and use the software to identify and mix the different instruments into individual sound channels afterwards. Blockchain technology comes into address issues around the rights to different music samples, enabling composers or individual musicians to be compensated for their samples samples are used by other production studios. So they're basically creating a system that allows AI to know when someone is using their sample, when someone is using their music. So the copyright issue will really not be an issue anymore, because the blockchain will be able to trace and find different pieces of music, even if you separate it and segregate it. This AI system seems to be able to find and source basically any single sample in the internet, which is pretty unbelievable. So people have been talking about this for a while, and now Sony is trying to implement this into the music industry. So musicians and producers will be compensated like they should for anyone using their sound or song. Google and Apple maintains distance, so they're taking a little bit longer. Like we talked about, Samsung is really driving forward the innovation within the technology, where it seems like Apple's taking a little bit more of a conservative approach. So let's read for this final couple of paragraphs here. First off, we can just see right here, basically Google is not allowing a lot of the apps for cryptocurrencies to be stored on their app store. We can see that the harsh stance has seen major exchanges like Coinbase have its cryptocurrency wallet DApp removed from the App Store over unresolved issues pertaining to developer guidelines. As recently as the beginning of March 2020, so super recently, Google Play has even removed the application of various cryptocurrency news platforms, including Cointelegraph's app. It's just a news platform. So yeah, there's going to be a little bit of backlash from that. That makes sense. Nevertheless, Google has provided infrastructure assistance to cryptocurrency software firm Blockchain.com. A company uses Google Cloud Services to handle its various databases for its blockchain wallet and Explorer services. The platform handles an enormous amount of data across various databases and has switched over to Google's Cloud Spanner to streamline its process. Meanwhile, Apple announces the development of the CryptoKit framework in 2019 that was initially met with much fanfare from the cryptocurrency community. As Cointelegraph reported at the time, the hype around the project was somewhat unjustified once the company gave some clarity into the project. The CryptoKit tool allows developers to carry out a variety of cryptographic operations. This includes the use of public key cryptography to create and manage digital signatures. The software effectively allows developers to improve authentication and encryption service to improve security. So yeah, they're definitely working on stuff, but I do think that Samsung is really trying to go beyond his boundaries and pushing the space a little bit more. But nevertheless, you do see major behemoths in the space actively look to implement this technology, or at least look into how this technology can be used to benefit their services in some way, shape, or form. So that is the news topics for the day. Hopefully you enjoyed it. We're now going to get into the charts, going to get into the price action for Bitcoin, and then looking at some of the altcoins there. So let's dive in here. Last time on Friday, we saw that nice ascending wedge. I don't know if it broke out. I don't think it broke out on the video, but it broke out very shortly after. We got a awesome entry. Let's just talk about it within our BTC markets here. Came back up. So there is the initial call that we had. Got my first entry on BTC short at 66.42. Stop loss set at 67.42. And then my first target was at 58.40. And then the next target was at 5K. Let's talk about the trade initially, and then we can talk about the upcoming potential for this week, and then even potentially next month. But we'll talk about what we had for our trade, what went down, and how we managed to play it out. So let's look at this. So this was our entry right here. Let's go to the 15-minute chart. It was basically right when it broke this zone. So on this candle right here, let's get our, actually let's just talk about the entry with our snip. And then we'll go over the larger time frame. We already got to this trade because it pumped up on us, and we got a really good first take profit. Didn't manage to get to the second one, but that's okay. So we saw after the consolidation right here, we saw the price initially hold this zone and then aggressively push back down. That was my first indication. Once I saw that, I was like, wow, we're probably going to get a push to the downside. And we talked about it in our crypto markets. Let's just pull back up a little bit right here. Dang, we're seeing a lot of sell pressure from the bears right now. I'm going to be really looking at short entries on BTC after we saw that bearish push, right? And there's that initial push right there. After we saw that, to me, it was showing a strong sign that there was bearish pressure, bearish indications in the market. And then we pushed down, we consolidated for a bit, but we held this ascending zone oh so well. We saw our first touch, second touch, third touch, fourth touch, fifth touch. Look how many times it respected the zone. Slowly grinding up. That, for me, validates this zone as a strong level of support, right? But we know we're getting a lot of sell pressure on the way down because we're in a consolidation zone. On the 4-hour, what did it look like within this zone? In my view, it was a volume distribution consolidation. We talked about that on Friday, how it's a nice, tight range where we're holding below a key level of resistance and we're not seeing a lot of momentum. And this candle right here on the 1 hour, this rejection was another, for me, sign and kind of a breadcrumb that the sell pressure was coming in. This is showing that this is a volume distribution phase. All I was looking for was the crack, was the break, was the momentum initiation. That was what I was looking for to enter my short. I was looking for bears, I was looking for shorts, I wasn't looking for longs or anything. I was really short bias on this trade because of the hash rate, because of me patiently waiting for 3-4 days for this potential setup. It finally came through, and that's how we got our entry. So we entered right there. We told our Performante Premium members of our entry. A handful of people got in and were riding that wave from the 6600s. Great push to the downside. And then at this stage, we held. We did not sell or anything. We were very patient with it. We got a pretty rejection from the bulls, pretty big rejection from the bulls here. Let's talk about the consolidation a little bit and how we managed the trade. So soon after we entered, we got a massive dump to the downside, hitting some level of support, as we can see, and then we consolidated for a bit after the price started to find a low. We put that stop loss basically a little bit below break even, so now we're guaranteed in the profits no matter what. Then we saw the price consolidate for a little while, not a problem. Our first take profit was at this zone right here, 58.50. That's where our first take profit was, so that was where our target was. And then the price consolidated for a little while. And then what did we see on the 4-hour? We saw the price make a low and then a lower low, and the price came back to the previous resistance that we were at. And we can see that on the Discord as well. Let me just find it here really quickly. I talked about a potential little dip down because of the weakness showing on the chart, and we can see that right here. The price dipped, made a low, came back, held a level of resistance. As we can see, it was a previous level of resistance in the price action. We dipped down, made a lower low. So now we're making lower lows after a very strong momentum to the downside. But then we recovered and came right back up. But at the end of the day, we're seeing more sell pressure than buy pressure. And the momentum is to the downside. That was a massive push to the downside, and that was another bearish candle to the downside. This could just be profit taking, and I was expecting another leg down. That's exactly what we got, right? So that was the market structure right there, and then this was the next leg down from around here to the lower low. Got an anchor point, first touch point, second touch point, and I was thinking that we could get that third touch point of this descending trend line right around here. That's exactly what we got, is we got another dump down to our last touch of the lower low structure for this trend line right around here. My take profit did not actually get hit because we didn't see a wick come down and smash through that zone. We saw the price hold this zone. There was no wicks that were below that zone. I was hoping for a little bit of an over exaggeration and there'd be a wick that touched the take profit zone that I had there, and it didn't. It consolidated and consolidated for a little while, and I was thinking, I'm only, let's say 1% or let's say 0.8% away from my take profit zone. It hasn't hit it yet. It's held the support multiple times and it's holding it right now. What I decided to do is I decided to not keep my take profit at 58.50. I decided to move it a little bit higher just so I'm able to take that profit within the consolidation. There was a probability that, yeah, it was going to hold this support and I wasn't going to see that take profit, and that would have been a waste of a trade because that was a solid move from my entry. It's like 11-12%. I think it was 11%. So that's a solid take profit zone. And what's 0.9% from an 11% move? That's for me worth missing to get that meat of the move. So what I did is on the Discord, let's talk about it. Here is that squeeze we talked about, and the little spill, and then looking for that take profit at 58.40. I said 58.50, somewhere around there, and then that take profit spilled. So I said I take 50% of my take profit at the consolidation that we talked about. The next major zone we want to hit is 5K, but we talked about how it's not really going past the zone, and we're okay with taking a profit here instead of down here. So not much of a price difference, and it turned out to be very, very good choice for us here because the price did move all the way back up. So we got 50% of our take profit here. Very, very, very happy with that move. We're out of the trade now. The next potential stop loss range was here, and it got hit at this zone here. So now we're out of the trade with a 50% take profit at this zone, and then a 50% take profit at this zone. We tried to give the price action room. Looking back, this descending zone might have been a good place to take profit if it broke that range, but we tried to give the price room. I was expecting the price to make another move to the downside, maybe holding this zone, as we can see right here. It didn't really hold. I was looking at the price, seeing if it would come back down, but it made another move to the upside and it took me out. So that's okay. I wanted to capture my profits. I'm not going to hold my winner all the way to break even. I'm not going to do that, especially if I'm up 11%. I'm willing to take the winner and see if I can get another entry somewhere around here if it does provide me with an entry. But at the end of the day, I'm very happy with that trade. Very solid winner. And, I took half of my profits there. So going to close that. And that was my trade. Hopefully some of you were able to capitalize on that bearish push to the downside. But in that said, the fact that we moved so aggressively from the $5,800 zone is going to shift my bias a little bit. And I think the 4-hour gives the best view of the market structure that I see right now. But first, let's go to the daily, because that's important to talk about. I think this daily chart gives us a very good overview of what I see anyways, because I still see the downtrend coming into the market, right? So we have 3 descending zones in my view. We have this descending zone right here, we have this descending zone right here, and then we have this descending zone right here. So we're going to be playing within this zone, squeezing into the funnel, my view. And then once we break the funnel, we're going to get a strong move. But unlike this move didn't have that much volume. I'm hopefully going to see on the next move to see what we saw in the start of 2019, where we saw a lot of volume come into the market right around here, right? But we're wanting to see it continue. It died off, as the triangle came in. We want to see that continued growth. But right now we see, just in terms of our vol, a lot of relative volume. We haven't seen these numbers continue, because not only are we just seeing the single candles from the 50% move down, but we're seeing it continue with lots of volume coming in, similar to what we've seen in kind of the bullish push that we saw in the start of 2019. So that is good to see, but in my personal view of what we're seeing the market do, I'm going to be looking at the consolidation hold to the downside for a little while longer this way. If it does push up above the around 7K zone, that for me would be pretty significant, but we're not forming some crazy moves, but it's pretty structured in terms of the trend to the upside. We're forming a low, and then we formed a higher low, and then we formed a higher low here, a higher high, after it formed a lower high right here. So basically we're forming a nice structure. So it's going from a low right here to a higher low to a higher low, and then this is a high, and then this is a higher high, and then this is a higher high. So that's kind of what we're forming right here, which is bullish. And there is decent amount of buy volume coming into the market, which is also bullish. So that's why I cut off that wedge. The fact that we held the $5,800 zone so well, right around here, the fact that we held this very strong and pushed right back up, to me shows that it's in a pretty strong range right now. So in my view, it went from a ascending wedge, like so. I think I actually posted a chart here. So it went from an ascending wedge to now a consolidation sideways. So this is how I view the market right now. It went from a reverse head and shoulders to a wedge. So if we take another picture of this, this is that wedge that we drew right here, right? It went from that wedge, and the fact that we held this support, now I take that wedge out, and now I'm just looking at this market as a consolidation. We're holding a level of resistance, and we're holding a level of support. We got a mid-range zone right here, but at the end of the day, we're right at a mid-range zone, so I do not really want to be looking to short or long. I want to be looking for the price to either come back to our major level of resistance, where then it could be a possible short, or it's going to come back down to our support right around here, and it actually could be a long, potentially, because of the fact that we held this so strongly. But at the end of the day, if it is a squeeze where we're holding a descending zone and a horizontal level of support, we're going to wait for confirmation, either break of the lower low or break of the price action descending zone, where we're going to be looking for a breakout move to the upside. But regardless, the fact that we held the $5,800 zone, in my view, gives me the new market structure of the consolidation sideways. We had a reverse head and shoulders, which is a reversal pattern, push the price up. We had a potential for a bearish flag right here, which is that ascending wedge, which is basically a flag pattern, and we got stuffed by the buyers. So that, to me, now shows that it's gonna have a hard time moving to the downside. That was the move that was either gonna push to the downside or we're gonna see some strength. So that to me shows that, wow, there's a lot of buyers, right? And we didn't get stuffed the first time right here. This price action pattern right here was a nice head and shoulders. Maybe you can see it right there a little better, but that was a nice head and shoulders, and that got stuffed by the buyers too. Same zone, the 58, right? And then now we're seeing that ascending wedge get stuffed at the same zone, the 5,800. So that's, to me, going to show me that that $5,800 zone is going to be a key level of support, key level of demand. There's going to be buyers at that $5,800 level of support. So if it comes back to that zone, I'm going to be looking to buy. If it breaks it, yeah, there's going to be a lot of buyers. From, let's say, the 20th or like the 19th of March until now, every single person who's bought from the 16th until now is going to be under, is going to be red, is going to be losing money if they're still long. So there's going to be a lot of people within this range that might sell, because if it goes below the zone, there's going to be stop losses, that's the recent low that we've had for the past little while. So if there is going to be a break, yeah, sure as hell, there's probably going to be a pretty big market shift, and that ascending squeeze could still come into play. So that's my view of the market. When the price does come down to this zone, we're hopefully going to see a descending zone and a horizontal zone, and we're going to have a squeeze, and we're just going to see if the price breaks to the upside or if the price breaks to the downside. So in my view, there's not much to do in the markets right now other than wait for this consolidation to give us a price action pattern that we have an edge trading. If there's something that's happening and we don't have an edge, we just don't trade it. Simple as that. We're not going to be trading something that we don't have an edge trading, because then that's gambling. We need to have a strategy, we need to have a repetitive system that we implement each time over and over and over and over again, so we have a system of approaching the market. And if we're not seeing anything that looks good, we just don't enter. Like right now, we're right in the middle of a key level of resistance, key level of support. I don't have a whole lot of dependability within the middle of a range. I have much more dependability shorting highs and longing lows. And if it makes a market structure higher high, we're looking for that higher low. If it makes a market structure lower low, we're looking for the lower high. Systematic approach to trading. That's what we're looking for. So that is what we're doing in the world of BTC. Hopefully you enjoy it. Let's just take this off, because at this point in time, we are looking at it just as a consolidation zone. So the major area we're looking at is at this zone right here, around 68, right around here. I think we're going to make it a pretty wide zone, like so. And then this is the major support zone at around 58. And then we're going to make that into a green area. Oops, I made the wrong thing green. That's what I want, green, like so. I can delete this for now. I can delete that, and I'll make this very small. I do still want it, but I don't want it as large, because this is now a possible invalidation of this price action pattern. And then we got our mid-range zones down here that we don't really need to be looking at right now, because right now we're just in a consolidation range, like so. So that's how I'm viewing the market right now. And let's just see if we have a trend line that connects these lows here, kind of like so. So that could be the trend line, that could be the squeeze right around here. And let's see if actually it connects to any of the trend lines that we have out here. Let's see if that works. Not really. It's a nice support turning into a resistance, but it doesn't really line up super well with what we see in the recent price action. Unless we go like that. Yeah, I think that shows, I think that's the outline there. So I'm happy with that being the outline. Let's refine that a little bit. Yeah, I'm happy with that. And then we can move into the minor level. like so. Oops, no, don't want to change the color. Just want to change that. And then we're going to go from here. We don't really have a refined zone yet. We just have a bit of an area that we think could be a possible resistance, but we don't have a clearly identified range that we're using right now. So we're just going to be giving it an area instead of a precise zone until we are able to clearly identify. There we go. I think that looks a little bit more cleaner. There we go. All right, so that is the possible resistance that we could be seeing here. And then let's talk about the squeeze that we currently are seeing. So this is some actionable opportunities that we can see for BTC because we've changed the structure of the market. So right now, in my view, we're seeing a consolidation. I'm looking for some squeeze. So basically, we see anchor point right here, anchor point all the way right here, first touch point, second touch point, and then we see 1, 2, 3. So it's a pretty valid zone, right? So we have 6 touch points in total. And now we know that this is going to be a potential zone where sellers are going to be located. We've talked about that $5,800 zone being a strong, strong level of support. So what do we see now as a possible price action pattern? A descending triangle pattern, and we're having a nice squeeze. We're either going to break and make a lower low, then we're going to be trading that move to the downside to continue the ascending wedge. Now this ascending wedge will be obviously a very large, long drawn out zone, but at the end of the day, it would be still pointing downwards and we would still be trading that momentum to the downside. And if it does hold the $5,800 zone as a support, we could be seeing a trend reversal where we have the consolidation here. This is that bearish move to the downside. Here's a consolidation. And then if we get a push to the upside like that, breaking the descending zone, that could be the market structure shift that could be pushing the price to the highs of 68 and then potentially even beyond. So that's going to be the outlook that we have for BTC in the short term. And you could play some trades within this consolidation zone. You know, from resistance to support is 8%. From support to potential resistance is maybe 6, 7, 8%. So there are possibilities and opportunities within that range. So for the end of this week or for all of this week, we could be playing some opportunities here. But we're going to be dropping the position size a little bit because these are lower dependability trades because we're within a consolidation. And when we break out of a consolidation, then we have a higher probability trade on our hands. So then we can raise the risk against the total portfolio a little bit more, put a little bit more size on, and get a little bit more aggressive because we have a high probability situation like we saw the break of this ascending wedge. So, you know, within the ascending wedge, lower probability, lower dependability, lower position size, lower risk. Breaking out of a key structural zone, increased risk, increased position size, increased probability, increased dependability. So definitely you got to understand when and what you're trading and understand how you're going to go about learning and putting on risk, because you're not going to put on, let's say, 2% of risk on every single trade that you put on, no matter how the trade looks. That, to me, there's better ways of going about it. So that is the price action of BTC. Hopefully you got something from it. Now we're going to quickly look at the support, or not really support, the supply and demand of BTC on Bitfinex on the margin trades here. So this is going to be showing the margin trades on Bitfinex for longs and shorts. The top chart is going to be for longs. We see there's just a demolished confidence for longs. There's not really a whole amount of confidence for the buyers currently within the market. We're just seeing breaking a key level of support and continuing downwards, not really seeing any pressure. So even with this nice, strong rebound, we're not really seeing any buyers come into the market since the drop, since the massive 50% drop. We haven't really seen any buyers come into the market, surprisingly, right? So the buyers that are coming into the market now are not margin, they're true buyers, right? So it's less speculation, in my view, and more or natural in some way of a buy entry, but at the end of the day, you're not seeing the leverage being used yet on these longs, so there is a little bit less confidence there. And then on the short side, there is a little bit more of a spike, but we're not seeing a huge surge in sell pressure. We got a huge, basically a huge cutoff of short sellers and a huge shift where we did see a lot of short sellers come in initially, obviously after that big drop, but they did get pretty scared after our huge rebound, pulling all the way back, and now we're seeing the short sellers come back in after that ascending wedge has broken, and that's currently where we are. So there's definitely more confidence in the short sellers right now, in my personal view, which makes sense. We just had a massive drop in the 50%. We had a nice wedge, and now we're making our second move to the downside. So at this point, we're gonna be patient and see which way the ascending the descending triangle breaks. That's going to be the market structure that we're going to be looking for. All right, so I'm going to get a little bit of coffee here, and then we'll be looking at the altcoins within the market. All right, so now let's go on to some of the different alts that we're going to be looking at here. For the alts, gonna stick to the larger time frames, just because of the fact that BTC is not in a pretty prime spot, so we're not really going to be looking for major entries right now. I think we can probably, no, I kind of like where everything is right now. I'm going to keep it where it is. So Ethereum to me looks a little bit more of a short, but we see that same trend line connecting right here for Ethereum as the same thing as BTC. So we got a couple options. Let's discuss the short right now because that's what's currently being shown on the price action. We see the anchor point right here. First rejection, second rejection, third, fourth, and then we see our first reject of a previous support, new resistance, and now we're seeing that second reject, previous support, new resistance. So we're seeing a ascending triangle. We get a push, we get our first pullback, rejection, second pullback. If we see that rejection come through, that could be a pretty nice possible entry for a short with that solid ascending trend line break, retest, and then a move to the downside. So that is a short opportunity. I still think that shorts are still in play for Ethereum. That's a bit more of an aggressive entry for a short. The more conservative entry for a short, in my view, that I would be taking is we have a high here, we have a lower high, we have a lower high, and we have a lower high. So what do we see? We can connect the lower highs, and let's draw a trend line right here. Actually, that's a very poorly drawn trend line. Let's draw it right there. Very similar to BTC, and then we got our mid-range zone right here. So now we have a descending triangle. So we're creating lower highs, as we can see, and we have a horizontal zone of support at around $120. So our horizontal zone of support is around $120, and we have a descending zone. So now what we're going to be waiting for is, still, if you're looking for shorts, you could be looking for this descending triangle to make you a lower low, and then you can be looking at the entrance at the lower high, but it gives you a higher probability of entrance because this trend line could break, this descending trend line could break, and then we could see the price make a move to the upside, like we've discussed in BTC. So those are going to be your two key zones. So it's a good opportunity here because you're currently squeezing between a support and resistance. You're basically going to play whichever one breaks. If it breaks the resistance, as long as the confirmations within the price action, market structure, VSA, and BTC is looking good, you're basically looking for a retest validation of buyers, and that's going to be your entry signal. Once you have validation of buyers, you're basically looking to enter. And on the short side, once you have validation of sellers, once it breaks, you're looking to enter. So it's a pretty simple structure of how you're entering it. You just have to stay disciplined and wait to enter until it's the right moment, and then basically just have discipline. That's basically the name of the game with these simple price action patterns. So that's going to be Ethereum. Link is still in my squeeze that I currently see. Very similar structure to a lot of the different alts. I think I'll delete this trend line and this trend line, and I'll keep the rest. I'll delete this and then make this a little bit bigger so you can see that. So this is going to be the squeezes that we currently have for Link. I think I'm going to incorporate the previous wick right there, just so we have more wicks touching this zone, more validation, and then we'll bring it up from here. So we got a nice squeeze. We got a descending zone right here that's still holding the lower highs, and we've already broken our ascending zone. And then we got our descending triangle right here, same as a lot of our other price action patterns. We can see the descending zone and a horizontal zone around $2, and the descending zone squeezing the price. Basically, we're going to be trading this with Ethereum and BTC. So what's great about having multiple price action patterns for the same asset class is you can have sympathy plays, which you're trading a price action pattern that is late to the move, or you can see front runners, which are making the move before the major assets like Bitcoin. For example, you could be seeing Ethereum break to the upside before you see Bitcoin break to the upside, and that could give you an indication of Bitcoin breaking to the upside. That would be a front runner. And then you have sympathy plays, which are the polar opposite. XRP, in my view, is a little bit messy in terms of where we currently are in the price action. We haven't broken the support for the ascending zone, haven't really broken the support for the resistance for the wedge. So I personally am not really looking to trade XRP right now because I don't really see anything that I love. It's like right in the middle of an ascending wedge with a lot of whipsaw action going from a high of 18 cents, almost 19 cents, to a low of 16 cents pretty quickly. So I'm currently not really looking at XRP for any trades at this moment. It's just within an ascending wedge, and Link and Ethereum are in a much better place for a higher probability trade. So why trade something that you don't have an edge on? It doesn't make sense. All right, BNB is the second last trade that we're going to be looking at, or the second last pair. Let's quickly look at the, or I'm going to quickly get a drink of coffee, and then we're going to go on and look at this pair. All right, so BNB is going to be the next trade we're going to be looking at. Let's just go to the 4 hour and see if we can find some trend line. The thing with BNB is I don't really see a trend line connecting the lower highs that's very nice. Like, it's not a very clear high or low support that we're holding, so I don't love that for first thing. First things first, so horizontal zones, yeah, it's pretty clear. We got our key zone of support at around $11, and then we got our main level of resistance right around here at around 13, and we're just going sideways right about now. So it's just a matter of forming a higher high and breaking to the upside, or forming a lower low and breaking to the downside. But right now we're just right in the middle of our consolidation. If we're able to make in a squeeze at a support, and if we see the same confluence with BTC break to the upside, a move of 20% just within the consolidation here is nothing to be shy about. It's definitely worth a trade. So looking at the 1 hour, we're just in the consolidation, and if we are able to potentially create a squeeze like this, that would be a great trade from a low here to a potential high of maybe $13. We get a push, pullback, entry around here, for take profits at 12%, 13%. That would be a great opportunity for us. So BNB is on the large time frame looking good, but on the small time frame, we got a lot of things before we're able to actually have an entry here. But it's not looking like a bad opportunity, but nothing close to an entry just yet. We're going to be patient for this week to see what it brings for opportunities. EOS is going to be the final pair we're going to be looking at. It did break the ascending wedge there, and we're just seeing a consolidation. I don't really see a whole lot similar to a lot of our other trades. We just see the price hold support and resistance, and then this ascending zone is not really relevant as of this point. So we're just seeing a consolidation right here, a consolidation right here, very structured. And if you're looking at it very simply, a nice long at the lows here with a stop loss below the previous low here, and then a first take profit at the highs here. 2.4 risk reward, 11% take profit, and a 5% risk. Not a bad situation to be in, but I do think that Ethereum, Link, and BNB have the best possibilities and the best trade situations for us in this upcoming week. So that's going to be what I'm going to be looking for. Performante crew members, like always, will get a notice on all trades and all potential opportunities I am looking at in the crypto market. So if you are looking to understand how we trade and are looking to understand when we are entering and want to get signals of our entries, exits, and all that stuff, definitely check out our Performante Premium service. We also offer one-on-one direct mentorship where we have videos, books, and other necessary tools and necessary things and Excel sheets and basically everything you need to go from a complete novice trader to a point where you're able to navigate in the crypto markets effectively. So that is the crypto market update. We really hope you enjoyed it. Like always, if you found this useful, if you found this valuable or entertaining any way, shape, or form, please subscribe to our channel. It helps us out a lot. Definitely give it a thumbs up if you truly do think it deserves a thumbs up. We do this every weekday for you guys and girls so you can stay up to date about what's happening in the crypto market as well as the price action. We don't want you to miss anything vital, and we want you to stay safe out there, giving you guys key levels of supply and demand and potential opportunities that you could be looking for in the near term. So that is the completion of our crypto market update. Thank you very much for watching, and until next time, happy trading, everyone.